What's up, fam? It's your boy, and you already know what time it is, baby, and you already know what we got to get into today. We got to talk about the major head fake. Kobe step back from three, nothing but net swish at the buzzer type shot when he goes for 60 from what we saw in the market today. If you've been sleeping underneath a rock, man, the NASDAQ finished down below 1%. We've seen the stock, the S&P 500 go down to about over 0.15% when it was definitely up almost a 1% on the day, and the Dow Jones barely finishing above flat. So a lot of things must have took place today in the market, you would think, right? Well, no, not a lot. We're going to break it down today about what is going on in the market and how the pain may not be over just yet, but how you can actually systematically play this event that is going on right here. And you may even need to mark your calendar for a specific date following up on this video that you may want to pay attention to and see how the market continuously responds to this information as it comes. And all the huss and fuss is quite simply down to Fed Chair Jerome Powell was nominated once again by the Biden administration to be the Federal Reserve Chairman under this new administration. Now, he does have to get his confirmation done as well, but Bernard also received confirmation as well as the vice chair of the Federal Reserve. So upon both people getting nominations to selected by the Senate, we are going to see basically the same type of monetary policies that we have seen in place since the pandemic has actually started. Now, one of the main things that a lot of people was holding their hands and deep breath for was when the Fed talked about actually tapering bonds and then talking about doing an increase of rate hikes. We looked at that as maybe going into September of 2022. Well, according to Bloomberg, checking out what the Bloomberg has to say when we look at the news today, I'll pull that up for you real quick, is that we are now expecting that the Fed rate hike may happen even sooner than that. Matter of fact, they are expecting that the Fed rate hike might happen in June of next year, which is at least 3 months earlier than expected, and this sent the market in a frenzy today. If you look, as it says, the first rate hike is priced into the June meeting of 2022, and we see a nice increase of a 12.5% bump in basis points, or what you'll see actually going forward on the Fed rate hike, right? So we go from actually being essentially flat in December to the next that Fed meeting in June. You will see a 12.5 basis point increase for the Fed rate hike that is expected. Now, as you actually play this out, you see how far the Fed rate hike increase gets to getting back up to that 0.25 mark, or where we actually expect it to go, and then taper off from there. As we actually see how this actually plays out, we'll see. But one of the things is that a lot of people are paying attention to what's going on here. Now, one of the key tools that I like to use as we talk about anything with volatility in the market is actually the VIX, okay? So when we talk about the VIX, what I want you to pay attention to is that we are once again hitting this trend line. We are staying above the support line that I actually have marked in on the actual VIX that we've been using since the pandemic essentially has started, and we've seen no lag loss in this movement in the market. But what we're getting now is another big push as we came out of that nice October push. We're down. We are now seeing the same nice big push up again on the rate hikes news, right? So now we're looking at how could this actually be something that we can pay attention to, right? But let's talk about when is that scheduled June Fed meeting set for. It's actually set for June 14th through the 15th of 2022. I mean, it's always subject to change, but they always try to keep the economic calendar in place so that way they can always have opportunities to make sure that they meet on time and talk about the markets and talk about the economy at the same point in time, like always. So for me, what we need to pay attention to is, does this, a lot of people are going to ask, is this going to put the SPY calls for $500 in jeopardy? Now, what we actually have to see is that we got to expect a little bit more pain here in the market as we get down into the holiday season when it comes to just not only the SPY, but the VIX as well. So let's take a look at the SPY and see what we're actually currently sitting at right now. When you look at the SPY, what you're going to see is that we actually had a nice run up on it on the day, where on the high we got up to 473.54, and now we're seeing that downtrend coming back into play, where we're down here at the closing market at 468. Now, what you want to look for is support. Support is key any point in time of the day. And now we are now bouncing directly off of that 5 EMA. We did slide down to the 12 EMA earlier in the evening at before the market closed on this bounce, but now we're actually moving up just a little bit tentatively to see what we can actually take advantage of this situation. So when you look at this as we're looking at it, this is a scheduled opportunity decline in the market like usual. Around the 20th of each month, we always get this decline in the S&P 500 before it takes off to its next level. Now, this Fed rate hike may be an issue, but it's something that should not hold people back here, okay? So for me, what do I expect to see is that I expect to see the continuous trend that we have. Now, is this a buying opportunity in the market right now? The pain has not yet been felt. But here's the thing. Loading up cash is a prime opportunity for a lot of people today, right? Now, what I expect to do with my portfolio, as I've been buying up a lot of calls here as of late. As a matter of fact, let me run through a couple of those calls that I've already called. I actually purchased today after closing out a lot of positions. If you see my video yesterday, I talked about how many option positions I had, and it was time to actually close some of them and trim those positions. Now, I reallocated those funds to new positions today. So let's talk about some of the ones that I purchased in light of this news, okay, that we're actually dealing with right now. So let's look and see what those are that we're looking at. Here, I bought Apple calls for February and December. Then I bought Dollar Tree calls for January, TSM January. Then I actually bought more Lucid calls today for this week. Dick's Sporting Goods for January. Then we actually bought more Tesla calls today, and then more JP Morgan calls as well. So for all these, and Best Buy calls as well. So now for all these calls, what I looked at is that we need to go ahead and actually get our last infiltration of money into the market right now at this point in time. And then as these actually mature into positive net gains, go ahead and close those positions, move that cash to the sideline, and see how the market starts to react as we head into the new year, as we get closer to actually getting to that SPY 500 call, and then sitting on the sideline just a bit with cash on the sideline for a dip ahead of the Fed rate hike, right, in about March or April time frame. Now, this may actually ensue a little bit earlier than that, because sometimes the markets try to get ahead of a lot of people in the market by actually trying to time their exits before everyone else does. So February may be a more painful month than we actually expect it to be. And the reason why I talk about this February may be a more painful month, because we had a euphoric rally in January in 2021 that you can expect in 2022, that same pain that we felt in February 2021 may be expected, because people are still holding to what happened earlier this year. So for me, what I look forward to is actually consolidating these positions down, closing out a lot of positions as they come around, especially these December 17th calls that I actually have out there in the wind right now. As they started becoming more victories, closing some of those positions, looking at how we're starting to see a nice euphoric rally as people forget about what's going on during the Santa Claus rally that we have in the market. Take advantage of that in January, close a lot more positions out, and staying steady on waiting for the interest rate hike fear to start to come and settle into the market in February, and see how much pain that we actually can see and experience heading all the way to May of 2022 due to the same factors that's going to play out and people panicking about that interest rate hike. And now, one of the things that we got to understand is, how is this monetary policy going to expand, and how is it going to stay normal, and how is it really not going to impact the market? I think that all those things are going to be factors no matter how you want to play this. And the one thing that you can do is load up the boat. This to me sounds like you need to at least 10% in cash, 10 to 20% in cash, leaving about 90% of your portfolio exposed, or 80% of your portfolio exposed at the max. Whichever way you decide to go about it, that's the best way possible for you to actually allocate funds to the sideline and then use the margin at your disposal. Right now, for me, I am fully involved in the market, but I damn near sure is ready to start pulling back out of the market as I see panic like this is ensuing. What I like to see when we're looking at the VIX, if we go back over and look at the VIX, is that you want to see that the VIX stays there. I'm going to hide myself for just 1 second. What you want to see on the VIX is that you want to see it down here about 1502. 1502 is a great level for us to always be paying attention to the VIX at. And when we get to that level, that means that the market is nicely juicy up right now, and that froth is out of the market right now. And right now, we're moving a lot of that froth out of the market by being up at this level. Now, one of the serious things that I want you to think about, though, is that today was a crazy day in the market. We was up nice and fat today, right? And then we saw a scale back during the mid-hour rush around 11 to 1 o'clock. And then we started market euphoria, started to restore itself, and then we saw that steady decline down, okay? Now, for a lot of people, if you're in options plays for this week that are set to expire, I would expect that you may want to close those positions no later than tomorrow, definitely Wednesday morning, because the volume is going to shrink out of the market as we head into the holiday week on Thursday, and then Friday being a light day of trading with the market session being closed on Thursday. So for me, if you don't close your positions out tomorrow in the green, fam, you may want to consider taking that loss, because Wednesday is not going to be a highly traded volume day. And then that Friday is definitely not going to be a highly traded volume day as well. And this can set you up for failure on Monday or leave you with options that's going to expire worthless on Friday. So I'd rather see you actually take capital, move it to the sideline, wait, and then start thinking about reallocations heading into 2022. So you got to think about this in the longer term, okay? So for me, when I think about this in the longer term, I'm thinking about how can we take advantage of the dips that's going to arise in the market, and when fear mongering is going to come in. That fear mongering is going to start more likely, in my opinion, February 1st all the way through the end, where the first rate hike comes in around June 14th to the 15th. So mark it on your calendar right now, June 14th to the 15th of 2022, or set a calendar reminder in your phone that this is going to be the time where the Fed interest rate hike is going to happen, and more likely going to be implemented in July. And that's where we're going to start seeing pain show up in the market. And then we expect to see another Fed rate hike later in 2022, and we'll start to see that information starts delve out over time. And one of the things that you got to pay attention to when the news media outlets get to talking, if they starting to put dates and circling it on a calendar for you, this is something that the federal government and other entities in the stock market game and hedge funds alike want you to understand in advance of, so that prices start to decline, and they are now ensuing to actually buy up those prices. So your long positions should still stay your long positions, but anything that's in a short-term swing trade, this is things that you want to be aware of and out of the market on. So for me, how am I playing this when it comes to my option game? Anything dealing with the metaverse, I'm sticking into. Anything dealing with EVs, I'm already long in that. And anything dealing with consumer discretionary, retail, or even the financial sector, those are short-term swings for me right now. And I'm going to let these actually play out in the next short-term 2 months. But then after that, I'm pulling out of those positions and sitting those on the sideline and watching for those prices decrease, and then buy up shares on these stocks that I actually really, really love in that emphasis, right? Because remember, I'm sticking to my game plan of 5 long holds right now, which is Tesla, Disney, Apple, okay? And now either with the metaverse pie that I've actually created on M1 Finance, or the Meta ETF, okay? And more than likely, it was NVIDIA, but now it looks like that metaverse pie, and it's going to take care of that when it comes to NVIDIA. So now I'm looking for that 5th position to add to the portfolio long term. So we'll figure that out as it goes, and it may more than likely be a mixture of in-phase and Matterport going forward. So this is what I think about when it comes to the market. This is what I'm thinking about when it comes long term like this. If you like the type of psychology that I bring to the market and the type of research that I do to give you this type of information, you definitely want to hit the like button on this video so I know that you love this type of content. Definitely subscribe to the channel too, so that way I know that you want to be a part of the fam each and every day. And definitely bang that notification bell so you can be notified each and every time I drop way more high content like this. And don't forget to use that first link down below, where you can join my Discord, where you can get information on every short trade alert, long trade alert, and even crypto trades and anything else dealing with the stock market, all in one place from your boy. You already know what time it is. I want y'all to stay safe. Peace.